Hello guys, welcome back to my YouTube channel. It's your girl Ako Yvette in the building. In today's video guys, we are going to be looking at insurance. What is insurance? What do you understand by insurance? Have you ever heard of insurance before? Or what do you understand by insurance policy? Okay, so welcome back for my returning subscribers. Thank you so much for always coming back to support your girl. Thank you so much. And for those that are watching me for the very first time, this is Ako Yvette in the building, and this channel, it's all about educational stuffs, updates about University of the People, and also little advice to secondary school students out there. So if you know you are new and you haven't subscribed to my channel, what are you waiting for guys? Rush right now, hit that subscribe button, hit that like button, state a comment at the comment section, and also share my videos to as many people as possible. Okay, so like I said, in today's video we are looking at insurance. What do you understand by insurance? Now guys, many risks exist as a result of certain natural factors over which man has no power. Okay, there are some risks that exist as a result of natural factors, and man has no power, human has no power over it. So it therefore becomes necessary to cover oneself against these risks by undertaking what we call an insurance agreement. Okay, let's look at the definition of an insurance. Insurance is an agreement whereby one party, called the insurer, agrees to indemnity. What do I mean by this? This party that is called the insurer agrees to compensate another party that is known as the insured. Okay, so that company that is that agrees to compensate this other person is what we call the insurer, and the person that is going to receive this insurance is known as the insured. So he's been insured against loss suffered by him on the happenings of a certain event, and in consideration money is paid to the insurer, known as premium. Okay, so that money that is being paid by the insured, remember that the insured is the person insuring his life, his or her life, and the insurer is that insurance company that is taking that risk. And there is a certain amount of money, guys, that this insured person is going to pay to the insurance company that is known as insurer. So this amount of money is what we call a premium. Okay, that's what we call a premium. Now, when the agreement is established, a document known as an insurance policy is prepared as evidence. Okay, so when this agreement is being established, what is being prepared, a document is being prepared to prove that there is an agreement, there is a contract between an insurer, that is the insurance company, and an insured, that is the person insuring his life or his property. Okay, that document is what we call insurance policy. Okay, now let's look at the insurance policy. It is a document. What do you understand by insurance policy? An insurance policy is a document which is in evidence of the agreement between the insurer and the insured. I've said it before that when the agreement goes on, when they agree on this contract, that's between the insurer and the insured, there is a document that is being established to show as a proof. And what is that document called? The insurance policy. So, like I said, insurance policy is a document which is in evidence of the agreement between the insurer and the insured. It usually shows the following details. Now, what does this document contain? Let's look at what this document contain. This document, which is called the insurance policy, which is an agreement between the insured and the insurer, contains these things I'm going to list here. Number one, it contains the name of the insured. Number two, the name of the insurer. Number three, the the subject matter being insured. The next, the sum insured. We know that the sum insured, like I said, is called the premium, which is the sum insured. Sorry, the sum insured is the amount that either this person is insuring his life for, or is insuring his company for, or insuring his property for. Now, when we talk of the sum insured, we are talking about the value of the property. Okay, then the next, now we are talking about the rate of premium. Okay, the amount that is going to pay, okay, the amount that this person is going to pay for the insurance company in order for his property, his life, or whatsoever to be insured. Okay, now the duration of the insurance. So the next thing is the duration of the insurance. That is the varage the varage period in the case of marine insurance. So when we are talking about marine period or marine insurance, when we are talking about marine insurance, we are talking about what we call the voyage period. Okay, now what happens after this is being drawn down? A copy of the policy is retained by the insurer, and a copy of the policy is retained by the insurer. So they both have copy of this document. What document are we talking about? We are talking about the insurance policy. So when all this is being written down, the name of the insured, the name of the insurer, the subject matter being insured. So when they talk about the subject matter, they are talking about what is being insured. Is it the life of the person? Is it a property? Is it a company? What is insured? That's what they mean by the subject matter being insured. And then the sum insured, it simply means that subject matter, that life of that person, that company, that property, whatever it is, how much does it cost? That is what they mean by the sum insured. Then they talk of the rate of premium. Now when all these things are being written down, guys, two copy of the document are being made. A copy of the document is left with the insurer, and another copy is left with the insurer. So the both party need to have copies of this document. Okay, they both need to have copy of this document. Okay, now let's look at why insurance is said to be the pooling of risks or spreading of risks. Okay, now have you ever heard of what we call pooling of risks or spreading of risks? Now in this video we are going to understand better about that. Now what is first of all a pool? Okay, what is a pool in insurance? It's not talking about a swimming pool or whatsoever. We are talking about a pool in insurance. So what do you understand by a pool in insurance? A pool is a collection of money contributed by a group collected by a group of interested parties for a particular purpose. Now, insurance can be described as the pooling of risks because small sums of money, that is called premium, are contributed by a large number of people in order to create pool of funds. So when they are talking about a pool in insurance, it's simply talk about that situation where that insurance company now collects those small money, can collect for company A, collect for company B, collect for company C, the premium. Okay, when we talk of a premium, we are talking about the amount, okay, the price that the insured is going to pay for his property to be insured. Okay, that's what we call a premium. So if, let's say, if a company wants to insure, someone wants to insure his company, right, and their company is worth maybe 3 million. Now, insuring that company that's worth 3 million, there is a price that's going to pay, and that's what we call a premium. They can decide that, okay, you're going to pay 1 million or 500,000 as a premium, okay, as a premium for insuring that your 3 million company. Okay, so if company A contribute this premium, company B contribute this premium, company C contribute, just like that. That's what we call a pool in insurance. Okay, so insurance can be described as the pooling of risks because small sums of money, which is called the premium, are contributed by a large number of people in order to create what we call a pool of fund. Okay, out of which payment can be made to the unfortunate few ones among them who may suffer losses. So let's say they insure this stuff for 1 year. Okay, at the end of 1 year, anybody that goes through this risk is going to be compensated. Okay, is going to be compensated. So if company B insured his or her car, company C insured maybe his company against maybe fire accident, company C insured maybe his life, his or her life. Let's say all of them insure these things, different subject matters, for 1 year. If at the end of 1 year any of these people suffer these losses, let's say that company B now that insured against fire accident, if that his company suffers this fire accident, he is going to be compensated. Yes, but it's not like if this fire accident occurred, they are just going to be compensated. No, they are going to bring in an agent who will do an evaluation to be sure that it was not out of carelessness. Okay, it was not out of carelessness, because they have to follow, or there are requirements that need to be made before this money is being compensated. So don't think that if you insured against, let's say, your life, and then at the end of the day you take your life, you commit suicide, they will just come and compensate you. No, that's not going to work. That's not going to work. Okay, death is something that you can't predict. So if it happens naturally, if it happens naturally, you're going to be compensated, or your next of kin is going to be compensated. If you insured your company against fire accident and it happened naturally, that you're not the person that intentionally burned down the company, you're going to be insured. So it's not like when they talk about insurance, you just take you just go, maybe at the end of, almost when the year is coming to an end, you just take maybe petrol, you throw throughout the company, you take you burn down everything, and you expect the insurance company to compensate you. No, they are going to bring in an agent who is going to evaluate these things to ensure that this did not happen. This happened naturally. It wasn't your fault. You didn't do it intentionally. The same thing if you insure your car, okay, and it happens that you have an accident, they are going to come in. They'll bring an engineer who will come in and evaluate to see that you did not just intentionally cause that accident to destroy that car, so that you will be compensated. So there are a lot of requirements that need to be met before you're being compensated. If it happens, if they discover that you are the one that caused all of these things, I'm sorry, you are not going to be compensated. You are not going to be compensated. All right. So if they discover also, there is what we call in insurance almost good faith. There are some other terms we are going to see along the way. If they discover that the information you gave was false information, okay, false information, you are not going to be compensated. So when you're giving insurance, you're insuring anything, and you're giving information, you need to give all the information, and truthful ones for that matter. But if in case they discover that you lied about a certain thing, maybe about the amount you bought the property, or maybe the name of the vehicle, the type of vehicle, or whatsoever, you are not going to be compensated when these risks occur. All right, you are not going to be compensated when these risks occur. So you have to be very, very careful when you are giving information for your company to be insured, for your vehicle to be insured, for your life to be insured. You have to be very, very careful. Give truthful information. Be sincere. Give truthful information, so that when these risks occur, you are going to be compensated as such. All right. So this is very, very important, because there are things that you cannot control in life. You can't control it. Okay. So that is what we call insurance. So there is a difference also between a football pool and a pool risks, a pool of risks in insurance. So somebody might just hear of a pool and think that it's a football pool. No, it is not a football pool. We are talking about insurance here. Therefore, we are talking about the pool of risks in insurance. Okay, when we talk about football pool, with a football pool, the participants contribute into a central pool of money, and they try to guess the happening of an extraordinary event. Okay, they try to guess. Very few people are able to guess the correct answer, and the one who guesses the correct answer collects a large sum of money from the pool. Okay, far in excess of his contribution towards it. Okay, therefore, with football pools, the lucky ones take large sums of money to make large profit. But with insurance, the unlucky ones who suffer losses are given just enough to enable them recover from the unfortunate loss they suffer. Okay, so that is it with a football pool. At the end of the day, it's the fortunate ones that go with the money, and the money is always larger than the sum they contributed. But with insurance, when we talk about a pool in insurance, we are talking about the unfortunate ones collecting a money, and which is just equal to the amount they lost. Okay, so there is a difference. Do not hear of pool in insurance, or just hear of a pool and we think that we are talking about a football pool. No, we are not talking about a football pool. We are talking about a pool in insurance. remember that with football poll, these are people that are being involved, and the fortunate ones that are being involved in that received a larger sum of money than what they contributed. But with pool of insurance, we are talking about the unfortunate ones receiving just enough of what they insured. Okay, so guys, that is it. Thank you so much for watching.